there. A deadline, Tom. Are you willing to call October 18th a deadline?
No.
I think in Washington, in Brussels, in capitals around the world,
come on.
we're way too loose with the word deadline.
Yeah, exactly. And, you know, you went through it, John, and firsthand with Prime Minister May. What were there, 3, 4, 5, 6, 8, 12 deadlines?
You're being kind.
I couldn't keep count, but, you know, I just don't play the game. I just don't buy it.
Lisa wants to play the game. Go on,
She
Lisa.
does. Please, Lisa.
Yeah, I love playing the game. Look, honestly, the reason why this is important is because it's the first time that we've heard from some of these officials what the date is. In terms of what the policy response will be from the Treasury Department, from the Federal Reserve, that gets more hairy and more political. And I think that that's actually what I'm most interested in. What's the willingness by the Federal Reserve to step in and take extraordinary measures to mitigate some of the consequences of running up against this debt ceiling? Look, there is an eventual deadline.
No, of course.
It just creates pressure.
They just don't know what it is. That's the point we're trying to make here. And usually they'd be more conservative about what the date actually is.
So you're saying basically...
No, they have to guess.
Well, of course they have to guess, but she's giving a timeline to try to expedite the process.
There's a range, and it's from anywhere in the middle of October to the start of November. And it's not a surprise that the administration would go with the date at the front end of that range. I mean, that's sensible, right? Which is why I'm hesitant to call it a deadline.
Can I mention the distinction here?
Sure.
Yeah, Mike Allen just brilliant on Axios with Margaret Tlaib and with a nice summary of the emotion of the White House. Can we remember that unlike many, many previous, this is a president with over 3 decades of experience with deadlines. And I mean, they have forget about your politics. This guy is a grizzled senatorial pro.
Yeah.
And that's different than anything we've seen. I'm going to say since Lyndon Baines Johnson.
So when do you think he steps in?
Don't know. I mean, I'm not pro.
He's been stepping in. He's been in talks all weekend with them. And it hasn't worked. That's been what's getting people concerned.
I'm just saying, since this is going back to LBJ in the early 60s is where we are, middle 60s.
This was a great conversation, guys.
It is.
I enjoyed it. Tom King, Lisa Bramvis, Jonathan Ferro. Equity futures up 31 on the S&P, up 0.7%. If a deadline's not a deadline, it's not a deadline.
It's not a deadline.
Come on.
The Red Sox have a deadline. They better win. They lost to Baltimore last night. What is that about?
We've got a deadline in 10 seconds. I'm going. From New York, this is Bloomberg.
China, if you look at U.S. taxes, how much time do you spend figuring out these big overarching themes as opposed to what happens with inflation?
There's an awful lot going on at the moment, as you say, and clearly some of the big debates at the moment are the slowing global growth picture, which we're seeing everywhere. And we're also seeing that at a time when inflation is rising and is proving pretty sticky. And to your earlier points, Francine, essentially the interplay between those two is critical. So some of those news events this week, whether it's OPEC and what's happening from a supply perspective, is going to be crucial, or indeed, of course, that US CPI print. So we've spent a lot of time thinking about inflation more recently, because clearly that leads into when we feel you may start to see the taper and when you might start to see rates going back up, particularly in the US. I mean, what might be useful just to explain a little bit is the focus that we've seen from everybody on China. You know, clearly China, huge in terms of the global commodity cycle.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
A little bounce after a little bond market storm. Emphasis on a little, maybe I'm being a little bit loose with that. Equity futures bouncing back up by 0.75% on the S&P, following the biggest one-day slide since May. On the Nasdaq, the biggest one-day slide since spring, since March. We bounced back by 1 full percentage point. The Russell, the small caps doing okay, up 0.9%. You know where the equity market is, you can guess where the bond market is. Switch up the board and get to the bond market. 2s, 10s and 30s. What a trip we've been on, though. This one has been really, really quick. Yields right now back south of 150 after breaking out through 150 yesterday, 149.76 in 4 basis points. It's yesterday upside down. 30-year yields come in about 40 basis points to 4 basis points rather to 2.0477%. That's the bond market, Tom. I'll get to the FX market. That gets your attention. Dollar strength. Strongest for the year. Euro dollar still breaking down, 116.60 down by 0.2%. That is a weaker euro, Tom. And just want to look out for a little bit later today, we're going to hear from Kuroda, Bailey, Lagarde, and Powell all at the same time.
John,
ECB forum.
Let's quantify the Pharaoh storm here, folks, and it's a legitimate word to use. I just fitted the 10-year yield move, John, and it is a 3.1 standard deviation move. John, you're right. That qualifies as a storm, not a crisis. It's a storm.
I've rattled through the numbers before, Tom, from 112.58 from early August to through 150 in the last couple of weeks, really, really fast. And when you think about the speed, look at the breakdown of big tech as well. The likes of Apple, Microsoft, they're down 7-9% from the highs in early September. There's been a move there, Tom, and I know at the index level, you're keen to point out this hasn't been a massive move, but some of those single names have caused a lot of pain over the last month or so.
Absolutely, no question about that. Right now, we're going to shift to the equity market with someone who does observe the yield space as he gauges his bullish view on equities. Benjamin Laidler is with eToro Global Markets, their strategist, and he joins us this morning to reaffirm own equities. Ben Laidler, you talk about the priors of yield. You talk about the other moments where we've seen yield surge, and you do say this time is different.
I think the speed has been different. Markets, I think, are reacting to the speed of the bond yield move, not necessarily sort of level, 20 basis points in a week. If you extrapolate that, this is basically the biggest move that we've almost ever had, even more than we had in first quarter, which was, close to a record itself. Having said that, I think we've sort of seen this movie before, right? First quarter, we had the, nearly 100 basis point move in yields over the quarter. We saw a lot of movement, to your point, under the surface. There was a lot of sort of sector rotation. But, the overall market came up 6%, and that wasn't dissimilar to what we saw in the saber tantrum back in 2013, which was the best year of the decade for equities. So, I think the market's sending us some messages here. I think it means a lot more for sectors than it does for the market. And I think this sort of pain is going to be temporary as sort of markets, as investors sort of reprice this a little bit. But I think that sort of bull case of Fed forbearance and a strong earnings recovery remains in place.
Have we had enough of a drawdown, a pullback, where it shifts the use of cash game for corporations?
I mean, the story for this year has really just been the lack of volatility, right? I mean, we've had this huge rally. We've had one sort of 5% pullback this year rather than the 3 we've normally had. So, the VIX remains sort of very low. I mean, back in first quarter, the VIX peaked at 37. So, you can make the case for why we might get more volatility, especially with everything that's coming out of DC and everything that's coming out of China. So, I think the outlook is one for probably more, a bit more volatility in the short term. But I think you're being set up for, for a Santa rally into the end of the year as we sort of clear this sort of DC and China noise as these sort of growth fears subside. I mean, virus cases in the US down 30% in 2 weeks. I mean, I think that sets us up for, growth recovery into third quarter. We have third quarter earnings coming up in 2 weeks, which I think is going to be, expectations look very low. So I think we've been set up for, another earnings beat. And I think the policy support remains very strong. Whether yields are at 1.5% on the 10-year or 2, they're a fraction of where they were coming out of prior recessions, and I think that gives you a lot of support to valuation.
Ben, you've touched on something important. I think a lot of people are waking up this morning, looking at some of those popular holdings, the likes of Microsoft, Apple, Amazon. They're down hard since the start of September. They're wondering what to do in the face of rising yields. Ben, I know you can't do single names, but for those big stories, that sector, what do you suggest they should do?
So first quarter, which is our nearest parallel, I think here, Nasdaq had a 10% pullback, and then it fairly quickly recovered. And the difference now versus then is, I think the yield move then was much more significant, and it was sort of first time out. I think this time round, and I think what we saw then was higher bond yields, hit stocks with higher valuations and these sort of long duration cash flows, which is tech. But then very quickly, I think we just get reminded, and I think we'll see this in third quarter, of just how strong the earnings power of these companies are and the fortress balance sheets that they have. So I wouldn't expect tech to necessarily lead from here in a rising yield environment. I think that's going to be commodities, financials, and value. But I certainly see them going up.
Lisa, this is a big chunk of market cap. Microsoft down 7% from the middle of September. Apple down 9%. Plus 9% plus since the start of September, the first week of September. They are big moves.
And the interesting thing is that they're big moves despite what Ben is talking about here, the idea that revenues are tremendous. Ben, at what point can big tech stop moving in lockstep with bond yields?
I don't think this is all about bond yields. I think that's an important ingredient. If it was all about bond yields, then, if you looked at the macro level, places like Japan and Europe, where bond yields are, dramatically lower, would have done a lot better and be trading a lot more expensive than they are right now. What the value sectors and this recovery and growth potentially sets us up for is, those sectors which are most exposed to that growth and those sectors which are least exposed to higher bond yields, i.e. have the lowest valuations, will do better. And that is, commodities and financials. And tech, which doesn't have those two things, which has less sensitivity to this growth rebound, which I think we should be talking more about now that virus cases are coming down, more sensitivity to sort of higher bond yields will naturally lag. But I don't think you can say that they're going to do particularly badly. I mean, valuations have actually come down quite a lot for big tech. And the surprise for this year is that those very strong growth rates, which you saw last year, haven't maybe come down as quickly as many thought they would do.
Ben, the story of this week is the reflation trade has changed. It is a new reflation trade. If you take a look at which sectors are doing the best, you're looking at energy, you're looking at financials with the prospect of perhaps maybe a steeper yield curve. It's not industrials, it's not materials, it's not consumer discretionaries that have to absorb some of these higher gas prices and supply chain constraint issues. Does this mean something to you in terms of what the reflation trade will look like over the next 6 months?
Yeah, I think it's going to be much more specific. I mean, there are. I mean, I think we're more sort of attuned to some of these supply chain issues than we were before. We obviously have a bunch of concerns on sort of Chinese growth out there, which obviously feeds through into sectors like materials, which maybe we didn't have last time. I would also just say, I think we're maybe right at the beginning of re-engaging in this sort of reflation trade. I mean, inflation expectations have really barely budged. Market inflation expectation. I mean, five-year is still, 223, 10-year, 238. I mean, they really haven't moved, very much. This perceived Fed, hawkishness. I mean, they basically moved the dots in line with where the market already was, last week. So I think we're really at the beginning of that rather than having had a big move already.
John, let's review the statistics of the greatest equity call coming out of the urgency of 2018, late 2018. Laidler up 31%, SPX up 18% the next year, up 15%, John, so far this year. That's a lonely group.
I remember it, Tom. I remember it well. Ben Laidler, can we have a repeat of 2013 when everybody starts freaking out about the removal of accommodation and this equity market flies? I remember that year. Most people do. What they forget sometimes, because the Treasury move is so burnt in the memory, what they forget sometimes is that the equity market was up almost 30% on the S&P 500. Ben, how different are things this time around?
I think we've already had a lot of this, right? I mean, again, we got stress tested in the first quarter. We had this huge move in Treasury yields, and equities are up 6%. Equities up, getting on for, well, until a few days ago, we were up nearly 20% for the year already. This was a big, big move for equities. As I say, I mean, we've got some volatility to get through, whether it's coming out of the bond market, coming out of DC, coming out of China over the next sort of month or so. But again, I think we're being set up for, this sort of Santa rally into year end as those concerns sort of fall away. We refocus on the growth pace, which I think is sort of this stealth catch up, which is, about to reaccelerate. All this weak economic data we've been seeing over the last, few weeks is all backward looking, right? It was all when US virus cases, global virus cases were 30% higher than they are right now. Yeah. And again, I think the policy support remains in place. Yields are a fraction of where they were coming out of previous recessions, and that just means that valuations are going to stay high.
Ben Laidler, still constructive. Of eToro, global market strategist. Tom Keene, that's the optimistic view going into year end.
Yeah, that's nice to get partition of that, John. And what's important to me is there's nuances to those that are bullish, just as there are nuances to those scared stiff right now.
Is it still too early to talk about Santa rallies, Tom? End of September.
Yeah, it's too early.
Too early, Lisa, to talk about a Santa rally?
Do you want to talk about it? Go ahead.
I'm just wondering if it's too early to talk about Christmas.
I think that right now it is too early simply because of all of the unknowns. Not only are we talking about China, we're talking oil prices. I mean, were we really expecting to see potentially $100 a barrel oil before the end of the year? How much does that change the equation?
78.61 on Brent this morning. Tom, we tried and failed around 80. We've heard from the bulls, though, haven't we? Jeff Curry of Goldman, Francisco Blanch of Bank of America, making the case that we could push even higher.
And importantly, John, and I thought that we had great leadership yesterday with Jeff Curry in the early morning, and then with Francisco Blanch. We talked a lot about demand yesterday. Halima Croft, who's wonderful, looks at supply, and she makes clear Abdulaziz of Saudi Arabia is the central banker of oil. Are they going to turn on the supply to assist President Biden and others? Yeah. That's her supply question this morning.
We will see. Tom Keene, Lisa Bravis and Jonathan Ferro, your equity market up 31 on the S&P, advancing 0.7%. Does it feel like Friday, Tom? You had a long week.
Yeah.
I feel you. It's okay.
It's like a 5-day week this week.
Together. I'll hold your hand.
Good.
Yields.
Can we do more geology? We
49.94.
need more geology. I need more Canary Islands.
From New York, this is Bloomberg.
With the First Word News, I'm Rishka Gupta. Congressional Democrats are at an impasse. They've hit a wall in an attempt to deal with three crucial issues at once: avert a government shutdown, prevent a debt default, and move forward on President Biden's $4 trillion agenda. Senate Republicans are blocking an attempt to raise the debt ceiling. Meanwhile, Democratic progressives and moderates can't agree on the giant tax and spending package. North Korea says its latest rocket launch was a successful test of a hypersonic missile. That suggests that Kim Jong-un's regime has come closer to putting nuclear warheads in high-speed gliders that can evade U.S. missile defenses. In Tuesday's test, the missile flew a relatively short 125 miles, making it difficult for experts to verify the hypersonic claims. A spectacular sight today from La Palma, one of Spain's Canary Islands. Lava said from the volcano that erupted 9 days ago is flowing into the ocean. Large clouds of steam could be seen drifting into the air. The temperature of the lava is estimated at 1,800 degrees Fahrenheit. Residents are being warned to stay indoors because of the risk of toxic gas. In China, the government is promising to let power prices reasonably reflect changes in demand, supply, and cost. The country's in the midst of a power supply crunch, and the government had been considering raising prices on industrial customers. China says it will effectively control what it calls unreasonable energy demand. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
We can come together to help less developed, fragile, vulnerable countries with adaptation and resilience, and we can do what we developed world need to do to reduce the damage being done by our practices of the way we produce energy.
But how likely is it that we keep that 1.5 degrees within reach?
Well, look, the Paris Agreement said well below 2 degrees. That's what everybody signed on to. What is well below? It's certainly not 1.9 or 1.8. It's somewhere close to the 1.5 degrees. And so I think it's very important to do it because every decimal point of rise in temperature is remarkably compounded in the damage that it does. We're at 1.2 degrees today, and you see what's happening. Imagine what happens when you're at 3 degrees or so, which is the track that we are currently on.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Who are U.S. Open tennis champion Emma Raducanu's 3 dream dinner guests?
Daniel Ricciardo, Michael Jordan, and then Tom Keane from Bloomberg.
She understands you.
Funny and very understandable.
I am reading in on tennis like nobody.
Yeah. Champion approved Bloomberg surveillance. Mornings on Bloomberg Television and Radio.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
We had set a test for beginning to taper those purchases of substantial further progress towards our statutory goals. We haven't met that yet, but as I mentioned, I think we've all but met it on the path that we're looking at. we would continue to add accommodation, not subtract it, until well into the middle of next year.
Chairman Powell there on Capitol Hill. From New York City this morning, good morning. Tom Keene, Lisa Bravitz and Jonathan Ferro. This Wednesday morning, here's the price action. We bounced back on the S&P. We're up 31, advancing 0.7%, following the biggest one-day drop since May on the S&P 500. Much worse on the NASDAQ. We bounced back there by 0.9%. Yields come in at about 150 now, 150.11 on a US 10-year after yields were pushing aggressively higher in the last couple of days. The dollar still stronger, euro dollar 116.59. TK, we're negative on that currency pair, 0.2%. We hear from President Lagarde and Chairman Powell a little bit later this morning.
Watch the majors, also watch the cross rates as well. Idiosyncratic, I'm watching Turkish lira. 9 lira to the dollar would be emotional. We're not there yet. John, I want you to explain substantial further progress in what Liverpool is doing in English football this year.
They're making substantial further progress, Tom. Top of the league. Top of the league. If you're an insurer, you might say they're well-positioned.
They're well-positioned here, and the insurer would be AXA, of course, the French giant insurer, with their support of the gentlemen, the lads from Liverpool, and we are honored that the Chief Executive Officer of AXA, Thomas Burbel, joins us now in support with Ian Bremer and Eurasia Group of actually quantifying risk. Thomas, I've got to say congratulations on the acuity of your study. You go out and speak to thousands of people. Explain why this study is different from last year or the others of the thousands you talked to.
Thanks, Tom. Yeah, we're doing this study now for the 8th year, the AXA Future Risk Report. And what's important for us is to understand how risks are perceived, but also how we can map them out. And what you can see is that obviously the hierarchy of risks is changing over the time. While last year, obviously, pandemic was the #1 risk, we are now seeing that climate is back at the top. So it's for us very important to understand what are the key risks and also how can they be solved.
Walk me through the key risks right now then, Thomas. Frame the climate debate for us. From a company perspective, are people worried about climate change changing their business, or are they worried about stakeholders turning their back on their business because they're not worried enough about climate change?
I would say all of the above. The issue is today that we have very many evidences around us that climate change does matter to us, does change our life. I think when you look at COVID-19, this could also well be connected to climate change. And the issue is really, what can we do about it? How can we change it? We see that in the political arena, there is a strong desire now on the legislative front to really push the transition. And so companies, investors, and insurers will have to align. And we've been very early on in this game, making sure that on the investment side, but also on the underwriting side, we are going in the direction of helping society, helping the companies to really make this climate change happen, because it is the top risk, not only in the general public, but certainly also for the young people that for the first time we actually put a specific focus on in that 8th edition.
Can you put some numbers on that? For the underwriting business specifically, Thomas, how have you changed how you do business?
So essentially, we are looking at, firstly, how can we make sure that we are avoiding companies' risks that are clearly polluters. So if you take the coal industry, it was in 2015 that AXA decided to exit coal on the investment side, and we've also followed the same logic on the underwriting side, making sure that we are redeploying that investment and capacity in the green area. However, this is not enough. If you look, the meat of the transition and the key area is really how to help industrial companies to move from a mix that is not sustainable to something that is more sustainable. And this transition area, helping to invest in companies that have a very clear and credible transition plan, and also doing the same on the underwriting side, is the journey we're going now.
Thomas, is your heft in dealing with this issue as a company more on the insurance side or more on the underwriting side, more on the investing side?
It is on both sides, but I do believe, Lisa, that on the insurance side, it is even more powerful. On the investment side, we are one of many investors. And if you want to find funds for a coal factory today, you will. However, on the insurance side, if you don't have an insurance, you will not find any investment. And we have launched recently the Net Zero Insurance Alliance, which is an alliance of 8 insurers under the lead of AXA, to make sure that we get the largest commercial insurers together to make sure that these risks are not underwritten anymore and that we are really helping focusing our insurance on the companies that are in transition.
So has this been effective? Have you seen those companies that will not get insurance from the big companies actually struggle or actually shift their businesses in response?
So on the question around avoiding call, we've clearly seen it. And I've personally been involved in quite a few customer conversations. As you can imagine, this is not easy. But if we don't go this way, we will not make that transition happening. So on the coal side, it has already happened. The transition side is currently in the making. And we are now putting the coalition together to also act on this level.
Thomas, from the coal side, just quickly, have you made the decision that you don't think those companies should be insured? Or have you made the decision that you can't put a price on the insurance?
No, we believe these companies should not be insured because somebody who does not contribute to the transition of our climate is not somebody that we would like to invest in, because we obviously see the negative effects on this on the other side. We are also a large health insurer. And so when you look at climate-related health issues, they have risen a lot. So for us, it makes absolute sense to be true to ourselves. How can we avoid these risks on the insurance side to also make sure that we have a better experience for our patients?
Fascinating position to put yourself in, though, Thomas, to decide which companies should or should not fail, which companies deserve insurance and which companies don't. Does it start and end with climate change, or does this go somewhere else?
Look, I mean, you also have other areas. If you think about, again, health-related issues, you have got the question around tobacco. And so, for example, in areas where we clearly see that there is a direct link between an industrial activity and negative consequences for health. So, for example, on tobacco, as of the first cigarette, you have a negative effect. We've also taken the decision in 2016 to exit this and to redeploy our investment means. This needs to continue, but it needs to continue in a way that we are accompanying our customers, that we are accompanying the companies we invest in to make sure that we help this transition and we don't penalize.
Interesting. Some people might think that's controversial. That's a conversation for another day. Thomas, just quickly, Sunday, Man City, Liverpool. Can we get a prediction, sir?
It is clearly that Liverpool will be winning, and because they are so well positioned.
He would not underwrite the insurance of Man City, Tom, I think is the message you're trying to send.
After the loss he just took on Tottenham.
It'd be great, TK, as an insurer, if you could make that decision as well. Which team succeeds and fails? Thomas Burbach there. Thank you, sir, the AXA CEO. Tom, I think some people might find those comments somewhat controversial.
Oh, yeah, absolutely. I thought, John, your follow-up questions there were great. John, can you imagine the branding value of AXA on Salah's jersey? I mean, think about that.
Yeah, can you imagine it on the tots, Tom? Do you think
no, I can't. There's no branding right now with the tots.
From New York City.
What's the place, the sausage place at the train station?
The electricity subscriptions It's a part of this new business area that we have called the Clean Energy Services. So the purpose with this new business area is to contribute and to create this biggest movement in the world for renewable energy. We will add even more products. We have solar panels that we sell, and now we have the electricity subscription. So it really fits that ambition that we have to, within the frame of life at home, the most important place in the world, we can add more value to our customers to live more sustainably. And this is a big part of the climate positive strategy that IKEA has for 2030, that we will remove and reduce climate emissions more than we emit in our entire value chain.
The growth story in cannabis remains very strong, even after the sort of loosening of the pandemic. There was a worry that there might be wallet spend competition, but so far the cannabis sector seems to be holding up very strong.
When you went to Harvard Law School, did you say, maybe someday I'll be on the Supreme Court?
Anybody who thinks maybe someday I'll be on the Supreme Court, I don't want to say there's something wrong with him, but there is something wrong.
When bonds zig, the stocks zag, that's really has not been the case for the last couple of weeks.
The market is starting to look forward to the healing in developed economies.
The concern today is whether yields are moving too far too fast.
The Fed cannot, and in my opinion, will not respond to supply-side inflationary shocks.
If inflation does get too high, then it really doesn't matter hawkish or dovish. I think the Fed has to respond.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Some calm after a bond market storm from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance Live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Your equity market bouncing back 29 on the S&P, up 0.7%. TK, it's a bounce back. The NASDAQ up 0.9.
Yeah, John, let's put a bow on it right now. All we're talking about is when are they going to raise interest rates? That's the raging debate this morning. I don't know what the answer is, John, but there's a fair number of people saying, you know what? You got it wrong. They're not going to raise rates in 2022. Everybody calm down.
Sarah Malik of Nuveen, Tom, really nailing it, just saying, look, this happened quickly. It did happen quickly. It was 20 basis points in a week. What underpins this move, though, Tom? At the long end, I'm not sure. I think we're getting a little bit too far ahead of ourselves, and we need to discuss that just a little bit more.
Yeah, the dynamics of the long end of the belly and the short end are important. First thing I looked at, John, when I walked in today was the yield from 3 months, 90 days, out to 30 years. I don't know how much use that is. I know Michael Dart is a big believer in it, but just the scope of the curve, if you will, and it's not inflammatory yet.
Lisa, the 30-year still through 2%.
I don't really understand it either. Honestly, I don't understand what's behind this move, because what we heard from Fed Chair Jay Powell was a little bit more hawkish, perhaps a little bit more of a timeline, but completely expected and frankly still highly qualified. So I don't understand that. What I do understand, though, John, is that there has been a material shift with oil prices and with the energy crisis and that backdrop. There's also a material shift in this idea of supply chain disruptions lasting for longer and some of the EPS earnings. And I think that has shifted the nature of the reflation trade and shifted the nature of the discussion.
Will it persist into the new year? Certainly going through September. What happened to September? It's over tomorrow. Where did that go, Tom?
I don't know. The Tots lost, what, 5 in a row or
Building
something?
up for this
That was
big September. You had a bad month, that's for sure. Lisa, building up for this big September, and then September just did not produce.
No, and then people are saying, well, you just wait till October, wait till November, but we don't hear that as much anymore. People aren't saying wait till that moment where we suddenly know it's over. It's sort of this understanding. It's just going to be a grind.
I'll see you in 22. Futures up
And maybe
29
before, too.
on the S&P. New
Are you
book.
taking off the
New
rest
book.
of the year?
New book,
exactly.
coming up 0.7% on the S&P 500.
You got to get the book done. Drawdown meditation.
It's important.
Finish that.
I'm
Now
do a
it's
series,
kickboxing.
Tom.
Yeah.
You know, 3 books together in one of
Give
those
us a
nice,
data
beautiful
check. Save
sleeves.
yourself.
Yields in 3 basis points. Call it 4. 10's a break of
Crisis
150.
over. We're 1.50. We're down. We're done.
94. It's a
over.
turnaround. Crude down 0.6%. Lisa 74.86.
Today, I'm really looking at what we're going to see with respect to global banking, central bank chiefs, as well as some of the data that we're getting. 10 a.m., we're getting U.S. August pending home sales. The expectation is for a little bit of a rebound after a sluggish past couple of months, just simply because of how high prices have been. Just to give you a sense of the pace of the increase, 3 straight months of record gains in prices, broad-based gains in cities across the country. I mean, the idea of 20% gains on housing prices, what does that do to home wealth? What does that do to inflation? 10:30 a.m., we get the EIA crude oil inventory report. How much do we see more of a drawdown in some of the supplies that we have in the United States? And what does that do to the price of oil, which has climbed to about the highest since 2018, although a little bit down today? And then 11:45 a.m., Jay Powell, Christine Lagarde, Kuroda, and Bailey all speaking on this ECB forum panel. What kind of consensus, Tom asked before, could they come to? Is there going to be some sort of working together? Right now, not really. And actually, Christine Lagarde, the notable dove, if you can call it that, among other doves, but people basically, she hasn't come. You know, honestly, is she going to change her tone, John, and basically say, look, the mood is shifting. We need to adapt to policies that are not crisis era, that really affect the modern moment of inflation, of supply chain disruptions, and not of 2020.
Isn't she an owl? I thought she said she was an owl. She wasn't a dove.
I missed that.
She wasn't a hawk.
What is this, Harry Potter?
I think it's pretty interesting we never talk about Governor Kuroda anymore. When people come on the program, Tom, and talk about normalizing, and we ask, well, what is normal? Well, what is normal? What is Governor Kuroda? What is normal at the Bank of Japan?
They're not even trading paper over there.
Been doing this now for decades, Tom.
Can I just point out that the new leader of Japan, there's a charming photo, John, out of Queens, New York years ago of him attending public school 13. That's pretty cool.
Is this Kishida, Tom?
Kishida.
Thank you. Nice to use the name, though. Sometimes.
Names, you know.
How helpful for people.
Put Dan on.
Dan Alpert joining us now, Westwood Capital founding managing director. Dan, the misattribution to inflation fears is unfortunate. Your view on the bond market. Why, Dan?
Well, you know, it ignores the fact that when you're starting to scream about how the U.S. is going to default on all its debt, there might be a subtle dislike of holding debt that people count on for liquidity. You know, normally we ignore the fiction. Markets ignore the fiction of the distinction between the debt issued by the Treasury and the dollars issued by the Fed. As a practical matter, they treat them the same, especially near the effective lower bound. But when somebody starts screaming about how the U.S. is going to be at risk of defaulting on its debt, you know, some people in the market take notice. Not many people like me don't, but at the end of the day, there are enough out there to really move the market. When the market starts to feed back into that, or at least commentators start to feed back into that and start talking about that being a sign of inflation, the fact that the market's selling off in the face of this kind of a crazy political crisis, I think you're getting the wrong message, and that delivers a very, very distorted situation, especially when it bleeds into commodity markets.
Dan, I want to go to your seminal work on the age of oversupply and thinking at 60,000 feet. The money question right now is, can American chief executive officers, their boards, their CFOs, can they adapt to the persistent oversupplies we see? What's the scorecard right now?
I think it's going to be very difficult. I mean, not only have we, ramped up imports to a level that is really huge relative to pre-pandemic, and we're all familiar with the enormous backlogs that have created, price dislocations across the board when it comes to tradables. The fact is that we have now juiced up capacity in areas like China because suddenly, they were already running fairly low. I mean, the Chinese capacity was probably at about 78%, 76% pre-pandemic. And now it's juiced up a little bit higher, but you see additions to that capacity coming in. There's a connection between this. Here's an interesting point. There's a connection between this and the whole Evergrande story. Think about the fact that China's going to now have to reduce its dependency on investment, on real estate investment, as a result of its crackdown on Evergrande and other property developers. Well, where is that additional employment going to come from? To the extent that there is exogenous demand in the form of exports, they're going to fill it. So when it comes to U.S. CEOs, especially domestic manufacturers and other service providers here, it's going to be very, very complicated to gauge the degree of competition that's going to be coming from abroad. Right now, we may have seen the bottleneck shift from sourcing to logistics, meaning we now have a problem with all the stuff stacked up on ships and in warehouses and getting it distributed around the country. But that's going to clear. And at that point, we're going to have a very, very large manufacturing capacity from abroad, and we're going to be back to a bad situation that we had pre-pandemic.
This really goes to the heart of some of the confusion around inflation, the disagreements, the hard to understand where you should look. And just adding to this noise was a paper by one Jeremy Rudd, a Fed researcher, that was highly controversial over the past week. Can you talk about why you say this is so highly informative, given the fact that he bemoaned a criminally oppressive social order in the economics field?
Yeah, the famous footnote 2 in the paper. He came out and he was very, very critical of the Fed's own, and he is one of the senior inflation forecasters for the Fed. The Fed's own methodology, very heavily dependent on inflation expectations. His view and the research that he exercised really shows that inflation expectations are very poor determiners of actual inflation in the future, and that generally they're quite incorrect. What he was criticizing with that footnote is the fact that all of the spending and fiscal spending that is currently being teed up and has been talked about before but really hasn't been effectuated has been held back on this fear of 1970s style inflation coming again. And really for 40 years, we have harbored that fear. And what he's saying is that, in the long term, this has proven to be a constraint on equitable growth that could have been eliminated had we not run policy in accordance with this fear of inflation reflected in expectations. I have a paper coming out, by the way. It'll either be out at the end of next week or beginning of the following week.
Very cool.
And it's 50 pages on this issue. So I hope you all will enjoy reading it.
Well, Dan, come on soon. And if we don't get through the 50 pages, maybe bring a summary and you can share it with our audience. Dan Alford there.
I'll do a companion deck.
At Westwood Capital. Dan, we appreciate that, sir. Thank you. I want to turn to some price action for you quickly. Sterling breaking down through 135. 134.91. This one closed with a 137 handle on Thursday. Tom, a real turnaround for sterling. Everything has changed today relative to yesterday. Equities are higher today, they were lower yesterday. Yields lower today, they were higher yesterday, with the exception of the dollar. The dollar stronger again this morning, Tom.
John and I go back and forth on this while we're, answering questions and doing work. I did a bunch of technical studies, John, and sterling hasn't had the standard deviation move of other currencies here, sterling dollar. But I tell you, from a point and figure basis, this is inside baseball. It is a teacher course, John, textbook, double high pull top, which screams weaker sterling.
Explain that to us, Tom.
I can't do it in 20 seconds. All I can say is read your A.W. Cohen. My grandfather beat it into me. Read your A.W. Cohen and you'll understand double high pull top.
I'll do that in a break, TK. 134.85 on cable. We're negative 0.4%. The dollar, DXY, near a 94 handle at 93.89. From New York, this is Bloomberg.
With the First Word News, I'm Ritika Gupta. On Capitol Hill, Democrats have hit a wall in their attempt to avert a government shutdown, avoid a debt default, and advance President Biden's $4 trillion economic agenda. Democratic factions remain at odds over the giant tax and spending package. Meanwhile, time is running out for funding the government and raising the debt ceiling. In Japan, Fumio Kishida is set to become the next prime minister. The former foreign minister won the leadership of the country's ruling party and is expected to be named to succeed outgoing Prime Minister Yoshihide Suga. Kishida has promised tens of trillions of yen in spending. He'll face an immediate test of his border appeal in a general election that must be held by November. And a spectacular sight today from La Palma, one of Spain's Canary Islands. Lava from the volcano that erupted 9 days ago is flowing into the ocean. Large clouds of steam could be seen drifting into the air. The temperature of the lava is estimated at 1,800 degrees Fahrenheit. Residents are being warned to stay indoors because of the risk of toxic gas. Netflix has acquired its first video game developer. The streaming giant has bought Night School Studio for an undisclosed amount. The company is best known for its debut title, the supernatural mystery adventure Oxenfree. Netflix plans to make games part of its subscription with no ads or in-app purchases. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Watch Bloomberg Surveillance to stay on top of the latest market trends, commodity trends, and fashion trends.
Are you going out for a fitting on a base suit?
I'm going to go and get a base suit. The crowdfund was very profitable.
$100,000.
Came in at about 100K, which is what it would take for me to wear that suit on this network. How do you get that bulky fit? I'll find out. I'll have a chat.
You get bulky,
get the
John.
bulky one.
You know, I'm channeling the president.
Look at those markets.
Don't taper the pants.
John,
Equity
you
futures
look
down
so
6.
good in a base suit.
I keep dreaming.
From New York City.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims front.
How are you thinking about those dynamics?
Your record gives me grave concern. Over and over, you have acted to make our banking system less safe, and that makes you a dangerous man to head up the Fed, and it's why I will oppose your renomination.
Senator Warren making the headlines she wanted to make. From New York City this morning, good morning. Opposing the renomination of Federal Reserve Chair Jay Powell. Alongside Tom Keene and Lisa Abramovich, I'm Jonathan Ferro. Your equity market up 22 on the S&P 500, advancing a 0.5%. Yields look like this. They're down 3 basis points on a session, still north of 150, 150.63. Euro dollar 116.43, down 1/3%. That's one part of yesterday's story that has continued. Dollar strength. Tom Keene, if we can take a quick look at the dollar index, DXY, on the cusp of a 94 handle now at 93.97.
Different from the Bloomberg Dollar Index, this is the major trading partners, 50-some% EU-based, and out to 94. It's a benchmark, John, along the way. What I would look at is Bloomberg Dollar Index, more all-encompassing, the EM angst that Damian Sassauer's talked about as well. And, John, this is something equity people and bond people have to monitor, even if you don't understand it. Lisa Abramovich will explain FX with clarity.
Looking forward to that.
When's that going to be?
Lisa, go.
Okay,
Now.
honestly, this is one mystery, frankly, is the dollar strength recently, despite the fact that people are talking the reflation trade. It's not a reflation trade like it was 6 months ago if the dollar is getting so much love. Is this a real rate differential story, an inflation rate differential story, or some kind of look for safety at a time of a lot of uncertainty with China and other
Final
places?
point, the important point. If it was a rate story, you'd expect sterling to be anchored.
Exactly.
Given the hawkish talk we got from the Bank
You're
of
right.
England last week. And for Governor Bailey a little bit later, Tom, I know it's only a couple of days, but I wonder if he's got his eye on this one. A breakdown on cable to 134.74.
You know, we don't have time now, but I mean, come on. Between the trucks, are they lorries? The lorry drivers?
HGV drivers. Heavy good vehicles, Tom.
You know.
How much are they getting paid now?
A lot.
A lot. Okay, let's move on to Washington.
Tom's reconsidering.
Jen
Put it that way.
Fitzpatrick with us in Washington saying, I got up for this, and he joins us right now
Every day.
with Bloomberg Government. Jack, what's the single thing you will try to observe in the white marble of Capitol Hill today?
Today, we're going to see if they can avoid a shutdown, even though there's not a deal on the debt limit, because that's a later date. The Thursday night deadline to avoid a shutdown is the issue today. The Senate is going to try to get a fast vote on a measure to fund the government through December 3rd. If anybody objects, that would trip up the whole plan, but Republicans are saying, at least in general, they're going to let that go forward. We'll see if they can get a vote in the House after the Senate, either today or tomorrow, and try to get the president's signature on that by 11:59 p.m. tomorrow to avoid a lapse in appropriations. And then they'll go back to worrying about the debt limit, which is the trickier issue.
Does Speaker Pelosi have the collegial support of the warring Democratic parties, or is she on the edge of a John Boehner?
I don't think the support could be called collegial right now. They're all relatively angry with each other, but they're holding it together for now. The question is, are the moderates in the Senate in particular, Joe Manchin and Kyrsten Sinema, going to give them a number they can work with? The progressives and moderates in the House are pushing back and forth, trying to get one bill over the other, the infrastructure bill for the moderates, the reconciliation bill for the progressives. If they can make enough progress on the reconciliation bill, they could try to move forward on both. But the key there is, do they get a top line number from Senator Manchin in particular and Sinema saying what is the framework that we can work with? They really haven't gotten that yet.
Jack, how dug in are the progressives in the Democratic Party? In other words, are they going to be willing to compromise perhaps more than the stories seem to suggest?
They're pretty dug in. I think the key issue for the upcoming House votes is not if the progressives just crumble. Could there possibly be enough moderate Republicans who side with the Democrats who want the infrastructure bill to overcome the progressive objections? We don't have an exact vote count right now, so I can't guarantee that the progressives are going to block this infrastructure vote that's supposed to happen on Thursday. But we haven't really seen any signs of progressives wavering on that. Both sides seem very confident. It's really just a question of, do enough Republicans jump in with the moderates to move that infrastructure measure forward if both sides of the Democrats are completely dug in.
Jack, is it fair to link this debate over infrastructure spending, over the debt ceiling, with the debate over the Fed chair, given that both have to do with President Biden having to wrangle his party together and dealing with incredible splits that really seem irreconcilable right now?
The two issues haven't necessarily converged yet, but you could imagine them doing that, especially because on infrastructure, on the legislative agenda, on the reconciliation bill and how it ties into the infrastructure bill, the president has worked to get progressives on his side. He let them really get out front and take the lead on a significant portion of the legislative agenda. It's not going very well right now, and they've hit a wall on that major bill that progressives want. If they don't get that, or at least if they don't get it now, or they must have to get a much smaller version, do they look for some other accomplishment? That's sort of one of the X factors when you're looking at, do other progressives follow Senator Warren's lead, or are they continuing to focus on a bill that they think is viable? So they could converge if progressives get particularly frustrated.
Hey, Jack, thank you, sir. Always something to worry about down in D.C. Our Bloomberg government reporter, Jack Fitzpatrick. Always something to worry about in this market. This from Bank of America, Tom. Moral hazard and a can't-lose attitude from investors only raise the risk of a larger fragility shock before year end.
There you go. Fragility shock. The pendulum of fragility shock.
I thought you might like that one. That's why I brought it up, Tom.
Doug Cass goes the other way. Now, Cass's reach right now, folks, is out to November 3rd. That's a scheduled Game 7 of the World Series where the Yankees, he says, will beat the Dodgers. Doug Cass this morning, and John, this is trading, and I'm not recommending this, but he goes long Amazon and long Google in this carnage.
Those names have been beaten up, Tom.
Yeah.
They've had a tough time.
He says he likes the fangs.
Can I complete the Bank of America quote? Adding further uncertainty to the outlook is the looming Fed taper and general hawkish turn away from the measures prompted by the COVID shock, Lisa.
All right. I don't know that the taper is necessarily unknown. I think that's pretty forecast. The speed of it, perhaps not so much. I do think, though, the fiscal cliff is something that perhaps some people are worried about. Look, there's plenty to worry about. There's always something to worry about. I mean, you know that I feel that way.
It's just so easy to wind up, Tom, sometimes. 93.98 on a dollar index. We're positive there. It's a stronger dollar. Cable breaking down. Sterling negative 0.4%. 134.77.
John, drive up 3rd Avenue, or, down to where your manse is. That, you're on the 85th floor, wherever you are downtown, looking over, Portugal.
Where are we going with this?
You can see the volcano in the Canary Islands. You're so high up in the sky.
Okay.
John, look at the consumption out in the streets. Look at the consumer boom we're living right now.
Tom, I'm with you. I see the same thing. Okay. You all right?
No, I'm not all right. The Red Sox lost to the Orioles.
From New York City this morning, and they're terrible, Tom. Good morning. This is Bloomberg.
Andy pointed that out to me.
companies that can move the fastest and be the most agile, no matter what change comes their way, no matter how fast it comes their way, these are the ones that are going to survive and thrive. China's a good example of that now. You see across the board some of the rules and regulations that are changing, or maybe the uncertainty that's coming out of the Chinese government, and they're trying to deal with some of the local challenges that they have, both in terms of how to manage the asymmetry between the haves and the have-nots locally. They're trying to deal with the issues of managing data and security and other aspects like that. The companies that can operate in China and around the world collectively in a bipolar way are going to be the ones that come out of this on top.
Are investors going to come out on top, though, or are companies looking to do business within China from the United States, are they going to come out on top at the moment, Bob?
Yeah, it's clear that the investors are in for what I think is going to be a bumpy ride. You see it today in terms of what's happening in the marketplace.
A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
I think what we've seen during this period of time is that communicating via video is not a fad, that we are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Crisis over. It's your line, Tom. Thought you might appreciate that.
Thank you.
It's all right. From New York City, this is Bloomberg Surveillance on radio, on TV, alongside Tom Keene. Elisa Bravitz, I'm Jonathan Ferro. Your equity market is a bounce back. This bounce fades, though, just a little bit in the last hour or so. We're positive 0.6% on the S&P, there and thereabouts on the NASDAQ too. Likewise on the Russell, the small caps coming back just a little bit. It was so unsettling, wasn't it? The move in the bond market. Switch on the board and get to the bond market. 2s, 10s and 30s. This time last Wednesday, a close at 130. This morning, 150.63. It's the pace of the move. It's 20 basis points in about a week, and a 20 basis point move in a week gets your attention. The level's still low, but it's the direction and the speed that rattled this market, Tom. What is interesting for me today is that you can turn yesterday upside down in the equity market for today. You can turn the bond market yesterday upside down for today. Yields lower today, higher yesterday. Equity market lower yesterday, higher today. Switch at the board and get to this one. Dollar still stronger for 4 straight sessions, and we push a 94 handle on the dollar index. And TK, I think that gets your attention too. 93, 97. Yeah. There's some dollar strength on the screen this morning.
This was everything in. This is a really different day yesterday in currency market, John. And again, you know, for theater, I'm watching Turkish lira out to 9 lira per dollar. We're not there yet, but there's a lot of nuances, whether it's loonie or peso, and certainly the majors, John, are front and center.
Look out for the central bank speak a little bit later. What time is that, Lisa?
11:45.
11:45.
How does she know that?
She's a machine, Tom.
It's just
Governor Bailey.
I'm in the surveillance nap by then.
Chairman Powell. Governor Kuroda. You're excited, aren't you? The dangerous man speaks.
The
dangerous man. I mean, come on.
Introduce the dangerous man to do individual
stocks. Everywhere agree with Senator Warren. He's a dangerous man.
Dangerous man.
93, 97 on the DXY. That's the cross-asset price action. Let's get you some movers this morning and say good morning to a very nice man. Good morning, Romain.
Good morning to you as well, John. Of course, a lot of people looking for safety, wondering whether it's safe to come out. Keep an eye on shares of Alphabet here, because this caught a lot of people's attention yesterday here with the big drawdown that we had in big cap tech stocks. It was Alphabet really that caught a lot of people's attention. Remember, this had been one of the most persistent stocks out there among the big cap tech stocks. It had been on a persistent uptrend going all the way back to early January. That broke down yesterday with Alphabet closing below its 50-day moving average. It's higher here in the pre-market by about 0.9%, but still below that key technical marker. A lot of people saying that Alphabet is actually going to be much more of a barometer for sentiment with regards to big cap tech, particularly in the face of rising yields, much more so than an Apple, an Amazon, or even a Netflix. Netflix shares are higher, though, this morning here, and a lot of this has to do with this new slate of Korean programming. This is South Korea.
Interesting.
And particularly the success of Squid Game here. This is a big Netflix survival drama. Yes, Tom, it's become a huge hit over there. More importantly, it's become a huge template for how Netflix is expanding overseas by partnering with some of these overseas studios. This is a huge deal, and a lot of analysts are very bullish on this. Micron, no one really bullish on this. This stock has been on a downtrend now for a few months. Remember, this is one of the best performers in Q1. It's now in the red on a year-to-date basis, lower here by about 3% here in the pre-market after some disappointing guidance. Flip up the board here real quickly. The biggest volume mover on the day, that actually belongs to Lucid Group here, up 6% here on the pre-market here. Remember, this stock had rallied 30% month-to-date prior to yesterday's sell-off at 26.19. It's actually back to where it was before that sell-off. Some bullish commentary on Boeing, Spirit Aerosystems, and Airbus over at Bernstein. Basically, travel trends starting to work in their favor. And keep an eye on Affirm Holdings, the company now moving closer to its ambitions of becoming a super app, going to offer, Tom, a debit card where you can now buy and sell crypto directly through them.
I can't wait for that. I'll be all Doge on that. Romain Bostic, thank you so much. On the close today, again, the VIX 22.18. This is a joy and exceptionally well-timed. Ambassador Hormats joins us now. Robert Hormats with Tiedemann Advisors, their managing director. But far more, I needed to finish a book strong a million years ago, and I finished with Robert Hormats talking about expecting the unexpected on Asia. And we are thrilled Ambassador Hormats could join us this morning on the new unexpected of China. Robert Hormats, with President Xi, what should we expect?
Well, I think we can expect a strongly nationalistic China. He wants to have China come back from 2 centuries where he considered that the West had taken advantage of China. China was fragmented internally. Now he's trying to pull it together under very strong party leadership and exercise enormous international influence. And he sees that the U.S. is tentative in some areas and has raised a lot of doubts among allies, although it's trying to put those doubts aside at the moment and strengthen itself. But he sees as a chance for China to strengthen its position in East Asia and other parts of the world, and he is going to take advantage of it. And the party's having its anniversary coming up, the founding of the Republic of China, the People's Republic of China, in about 20 years, and he wants China to be the world leader.
With a new leader in Japan today, Ambassador Hormats, the Okinawas, the islands of Jima and the rest that we remember from World War II, they stretch down some 134 miles from Taiwan. Japan has a vested southern interest in Taiwan. How should the U.S. adapt to the calculus of Beijing, Taipei, and Tokyo?
Well, certainly China is interested in increasing its influence throughout the entire Western Pacific, and the small islands are the starting point. I don't think taking on Taiwan is, while a goal of China's, is probably not something the Chinese are going to do anytime soon. I think it would be a very disruptive factor in the region, but it certainly is going to exert its influence all around Asia, and certainly it's increasing its naval presence, not only in East Asia, but in Southeast Asia and in the Indian Ocean and other parts of the world. So I think China will be restrained on Taiwan, but certainly will be exercising its naval influence throughout the entire region.
Bob, it seems like there's been a material shift, or at least a tightening in the screws over in China by Xi Jinping and the entire party. And it seems like there's been a shift in the regulations in terms of how hard they're willing to crack down on certain sectors. And yet when we speak with corporate executives, they are so delicate about this. They say, we're not going to change our strategy. We still see a lot of opportunity. As somebody who's operated on all sides of this debate, how do you think that corporate executives from the United States are viewing what's going on in China with relation to their presence there?
Well, it's very interesting. I've spent a lot of time over the years with President Xi when he was head of Zhejiang province and then when he was vice president. And he does want foreign investment in China and has been advocating that for a substantial period of time. On the other hand, he has a couple of goals, one of which is to have much stronger party control over the Chinese economy. And he's exerting it now primarily with big Chinese companies, where in virtually every company there is a Communist Party committee at very high levels in the company, and it is very influential in the decisions that the companies make. The second thing he wants is much tighter regulation, because he sees, he calls it the three red lines. He sees a lot of leveraging going on, particularly in the real estate area, and we'll probably talk about that in a moment. And he wants a much tougher regulatory environment for borrowing, and particularly in real estate. And third, he wants a greater degree of equity in the system. The notion that some companies and some people do very well and others don't is important to the Communist Party's control over the economy, and demonstrating that it's dealing with middle and lower income people and not just with higher end people.
Ambassador Hormats, I really have to, though, go back to what you said originally, that Xi Jinping still very much wants foreign investment. And yet the message that's being sent to the bondholders of Evergrande, the dollar bondholders, is very different. How do you dovetail the actions that they're taking with international investors with this case, with that drive for more international investment?
Well, in this particular case, most of the bonds and most of the exposure is Chinese. 90% plus of the money is owed to either Chinese bondholders in renminbi or to suppliers in China, and therefore the impact on the rest of the world is not directly going to be that great. And I think that a lot of warnings have already gone out that something is going to happen. I think they want to have an orderly restructuring. The bigger problem really is not so much the foreigners here, although it's gotten a lot of press, but it is the localities. This company has projects in 200 venues in China, in every province. And in many cases, a lot of people have bought apartments or homes on the basis that they'll be built next year or the year after that, but they put their money down. If this company goes under, then a lot of those people will find themselves out of a lot of money. So I think they're worried more about the social instability in China than they are about foreigners. I don't think foreigners, other than perhaps psychologically, are going to take a very big hit here. But I think he's also going to make the point that the longer run here will be a much better regulated Chinese financial market, particularly in real estate. Real estate's about 28% of the Chinese economy. If the real estate market tanks, it'll slow down the overall economy and hurt foreign investors in China and, of course, Chinese companies. So I think he's feeling that if he can regulate the economy in a responsible way, in a curious sense, the prospect of a bubble will diminish, and the stability of the Chinese economy over the medium term will increase. So I think that's the message that he's providing. Yeah. But also, don't forget, a lot of companies are still doing well in China. A lot of American companies still see this as the world's fastest growing market, which it is, and they don't want to do anything to upset the apple cart.
So long as the authorities let them do well, Bob, and I guess that's the issue going forward from here, sir. Valuable insight, as always. Bob Hormats there. Robert Hormats, Tom Keene. The property market is not for speculation. That's been a story for China for a while that they've been trying to push.
They're headlining it right now, PBOC out saying, forget about the speculation. That's a tough thing to accomplish, John.
From New York City this morning, good morning.
Tough.
This is Bloomberg.
With the First Word News, I'm Ritika Gupta. Congressional Democrats are at an impasse. They've hit a wall in an attempt to deal with three crucial issues at once: avert a government shutdown, prevent a debt default, and move forward on President Biden's $4 trillion agenda. Senate Republicans are blocking an attempt to raise the debt ceiling. Meanwhile, Democratic progressives and moderates can't agree on the giant tax and spending package. North Korea says its latest rocket launch was a successful test of hypersonic missile. That suggests that Kim Jong-un's regime has come closer to putting nuclear warheads in high-speed gliders that can evade U.S. missile defenses. In Tuesday's test, the missile flew a relatively short 125 miles, making it difficult for experts to verify the hypersonic claims. In the UK, Business Secretary Kwasi Kwarteng says soldiers will be deployed in days to drive fuel tankers. That comes after the government said that shortages that triggered chaos at gas stations are stabilizing. Meanwhile, the government's reserve tanker fleet will be on the roads today to boost deliveries of fuel. U.S. regulators are leaning towards authorizing half-dose booster shots of the Moderna coronavirus vaccine. Bloomberg has learned the FDA is satisfied that the booster is effective in shoring up protection. The U.S. has already okayed the Pfizer-BioNTech shot as a booster. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
What have we learned from this evergreen crisis so far?
From my investment perspective, I think diversification is very important. So far this year, we see many events, right? Maybe in the fintech sector and education, casino, and property. So I think diversification helps you lower your risk on your overall portfolio.
Medium term, though, are you seeing more risk and reward in the high yield space in Asia? I mean, how are you viewing this right now? Are there actually buying opportunities given just the selling we've seen?
This time is a bit different in the property cycle because in the last, when you see there's a tightening measure, there's always demand there, right? Just the government trying to suppress the demand. But this time we're seeing a confidence issue, is like a buyer strike because of the sentiment. The evergreen is hurting the sentiment and people don't want to buy. And other developers, because they want to get cash.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. perspective on the day ahead. Bloomberg Surveillance, Early Edition. Weekday mornings on Bloomberg Television.
We're also excited to be part of this return back to the city. We'll be bringing close to 5,000 people back to this office over the course of the next 6 months, and we're absolutely thrilled to be part of that resurgence.
Christiana Riley there, the Deutsche Bank America's CEO with Shonali Basak. Tom Keene, is anybody calling it the Deutsche Bank Center? Is it still the Time Warner building? I've heard nobody call it the Deutsche Bank Center.
On the southwest corner of Central Park, and it is truly iconic as Time Warner, and of course the attachment to CNN.
The Deutsche Bank Center, Tom.
The Deutsche Bank
Get
Center.
it right. We're up 22 on the S&P. I'm with you. I don't either.
I don't go to that Whole Foods either. You know.
Yes, you do.
No, I go to the other one. Uptown.
Which one?
I go to the one
Upper West Side.
Yeah,
You've got one right by you.
It's got bigger turnover.
It's on 87 and 3rd.
No, I like the one on the west side.
Okay, why?
It's
more
got
you.
better turnover.
Is
It's
it posher?
more. You know, it's. I can buy all the gluten-free stuff the family.
Nice.
I like the Spanish olives there.
Value add. Down 3 basis points on 10s. Tom, your 10-year, 150.63. The dollar stronger. Euro dollar, 116.45.
One of the very common features we have, David Wilson and I have never touched gluten-free. He's here with a utility analysis. Come on, you buy Dominion and forget about it.
No, you don't. Not lately. The S&P 500 Utilities Index is down 14 days in a row. Now, why that matters, it's not only the longest losing streak ever for that index, which goes back to 1989, it's the longest streak for any of S&P 500's 11 main industry groups. That just goes to show you how relentless the decline in these stocks, which, let's face it, are pretty interest rate sensitive, has been.
Are they a retirement vehicle, as we were taught by you, frankly?
Well, I mean, not so much. I mean, given that the industry is changing, let's face it, there's so much solar power around. And, you know, when you think about what's in the utilities index, it's largely the more traditional electric and gas and water companies. So, you know, you really don't capture that transition. I would just point out that, you know, if you look at the 10-year Treasury over the time frame where the utilities index has been falling,
yeah,
the 10-year yield actually fell on 5 of those days, which means that the bonds were rising at the time that the utility stocks were falling. You know, it's just been a more consistent decline, maybe a better gauge in some respects of what people are anticipating on the rate front. Oh, and by the way, it's the worst performing industry group over that stretch out of the 11 main groups, too. Real estate, you know, second worst, another rate sensitive group, down 7 of the last 8 days.
David Wilson, thank you so much. Got to run here today. John, can you explain to Mr. West Ham the uproar here that Mr. West Ham came out and missed the shot?
Mark Noble, Tom Keene, last minute penalty against Manchester United. Mark Noble's on the bench, legend of West Ham. They bring him on for the final kick of the game, and Tom Keene, he misses. Cameron Kreis of Bloomberg joins us now. He is Mr. West Ham as well. Cameron Kreis, before we get into the markets, Cameron, what were they doing? Why bring him on? Why have him take the shot?
Well, he's got one of the best conversion rates in Europe. He's an old hand. He's the club captain. I think he made something like 27 out of 29 penalties in his career. And, you know, it was to draw the match. And it's one of those things that the numbers make sense. It didn't work out, so it's easy to second guess. But listen, I haven't seen the other players take penalties in training. Yeah, it was unfortunate it didn't work out. It could have been a fairy tale. It turned into a bit more of a nightmare.
That's what we do on this show, Cameron. We
I can
second-guess
understand
people.
why the manager did it.
We criticise and second-guess Cameron. Let's talk about this bond market. 20 basis points in about a week on a 10-year yield. A lot of people coming up with some nice stories to fit the price action. What say you?
Well, I think it's a confluence of a lot of things. I think we can't ignore what's going on in Europe, for example. The energy story in Europe has clearly driven yields up in the UK, in Germany. You know, I think you can argue, actually, that the primary nexus of this whole inflation story is the European story. Because if we look at break-evens in the United States, they've kind of gone nowhere over the last few months, even with the rise in nominal yields. Whereas in Europe, if we look at, say, the French break-evens, the 9-year break-even in France, it's gone up very, very steadily. And I think you could probably argue that insofar as European investors have been incentivized to buy treasuries on a currency hedge basis because they get a nice yield pickup vis-a-vis the domestic bond market, as the domestic bond market in Europe has ratcheted higher in yield, that's naturally put some pressure on the treasury market as well. And then, of course, we've got the Fed last week, which I think was undeniably fairly hawkish.
Cameron, are we within a range, or are you sensing whatever the series is that we're at breakouts?
Well, it feels on a narrative basis, it certainly feels like we're breaking out. If you look at some of the proxies that you can use for the trend followers, that also suggests breakout where CTAs will have flipped in many cases from long bond futures to short, and that, you know, if you lay one bet, it's sort of random whether it works. If you lay 1,000 bets, chances are you're going to make money playing this sort of strategy. So yeah, it certainly feels like we're going to keep testing higher in yield, barring some sort of catastrophe on either the economic front, or if the equity market keeps falling in a sort of disorderly fashion, or a more disorderly fashion, then that could perhaps return a bid to the bond market.
Just real quick here, Cameron, the dollar. What's the story behind its strength?
Well, I think interest rate expectations is the primary angle here. The ECB, you know, I think kind of by design, it wants to lag the Fed and other central banks, and the Fed has sort of, on the dot plot at least, has sort of ratcheted up the timetable and the magnitude of rate rises. So I think it's fairly orthodox. It's a fairly orthodox reaction. If you look at interest rate differentials, say the 8th Eurodollar contract versus the 8th Euribor contract, the euro has tended to match that spread pretty closely over the last sort of 6 months, year or so, and that's clearly moved in favor of the dollar.
Cameron, thank you, sir. Great to catch up. Good luck this weekend.
My pleasure.
As always,
Thank you.
Cameron Christ, thank you. Important news out of the UK, Tom. Here's the headline. The UK will deploy its reserve tanker fleet this afternoon.
There we go.
To boost deliveries of fuel
today,
to forecourts across the country. The trucks are driven by civilians. I can confirm, or maybe not, that Tom Keene and I might have been training for this, Tom.
We were.
We were ready to go.
I get upset.
You know, if we're part of the reserve fleet.
This is more complex than people think. You don't just get in the truck. The first idea is the steering wheel's on the wrong side of the truck. That's the first thing.
Oh, my God.
Thank you to the gentleman out on Twitter that captured this moment.
It is.
Tom McKean and I might be part of the reserve fleet.
We might be.
That gets deployed.
Can I just say, I looked up salaries, what the salaries were that were being advertised.
What are they going to pay us, Lisa?
So in dollars, I converted it using the FE11. Basically, $60,000 to $75,000 a year, which I guess people are saying is much higher.
It's living large. John, what's great here is Sess Hart of Carlsberg says we can drive the Carlsberg trucks.
Did he?
Yeah.
Is that going to be
Just
okay?
emailed in. He said,
Wonderful.
you know.
Wait, question.
Wonderful.
Who of you has a driver's license?
Tom and I both did our HGV license, £4,000.
We did.
What about
Brexit.
the car license?
We're ready to go. You don't need that. Jay Poloski up next. This is Bloomberg.
Boosters work, and they would definitely help. the boosters, both the Moderna and the Pfizer booster, take antibodies back up to at least where they were, and probably twice or 4 times where they were at the peak. It's definitely teaching your immune system to recognize Delta better. The antibodies that people are making after a booster, they are better antibodies. And they're also probably then better antibodies at recognizing other variants in the future. If you get infected once, your immune system says, all right, here's how much I want to set aside of memory, right, to not get that again. You get infected twice, your immune system says, well, that didn't work, right? It should probably up that some. You get infected 3 times, your immune system is like, all right, this is a problem. It's really worth not getting sick anymore. And so the vaccines are essentially that, right? And if the immune memory was pretty good after the second one, what's probably going to happen after the third one is that it's going to be more stable. Even if the peak is the same, you're going to keep more of it for a longer period of time. It's a race, right? It's a race between the virus and your immune system.
When you went to Harvard Law School, did you say, maybe someday I'll be on the Supreme Court?
Anybody who thinks maybe someday I'll be on the Supreme Court, I don't want to say there's something wrong with him, but there is something wrong.
In crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful. And I'm a big believer in it.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Watch Bloomberg Surveillance to stay on top of the latest market trends, commodity trends, and fashion trends.
Are you going out for a fitting on a base suit?
I'm going to go and get a base suit. The crowdfund was very profitable.
$100,000.
Came in at about 100K, which is what it would take for me to wear that suit on this network. How do you get that bulky fit? I'll find out. I'll have a chat.
You get bulky,
get the
John.
bulky one.
You know, on a channel in the press.
Look at those markets.
Don't taper the pants. They
John,
could
you
futures
look
down
so
6.
good in a base suit.
We're
Keep
on the
dreaming.
S&P.
The fact that the market's selling off in the face of this kind of a crazy political crisis, I think you're getting the wrong message.
The concern today is whether yields are moving too far too fast.
If inflation does get too high, then it really doesn't matter hawkish or dovish. I think the Fed has to respond.
The Fed cannot, and in my opinion, will not respond to supply-side inflationary shocks. You have all sorts of supply chain disruptions at the moment, which are creating some inflationary pressures.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Markets lift, crisis over. We welcome all of you on radio and television. Some careful analysis here. We're going to go through this quickly this morning because our guest coming up is the bull on Wall Street. Jay Pulaski with us in moments. John, we got a Jay Pulaski market this morning.
Yeah, we've got a bounce back, Tom, up 24 on the S&P. That bounce fades a little bit, though, up 0.5% on the S&P 500. And we've got a bond move to talk about. There are levels, and then there is rate of change, Tom. The level at 150 on a 10-year, we can live with 150. Of course we can. But the rate of change, Tom, 20 basis points in a week, that's a real move. And that was always going to cause some disruption, and it did.
A little bit of curve steepening in the last, 48 hours or so, maybe some quiet there on the curve steepening front. John, no quiet. Let's look at sterling as a proxy for DXY 94.
A breakdown south of 135 and Governor Bailey coming up a little bit later. What's noteworthy about this, Tom, is we had a hawkish tilt from the Bank of England last Thursday, and it hasn't anchored sterling. Pure dollar strength with a lot of sterling weakness out there. That's got to be the story this morning for me. A dollar index that is still strong. Everything else has turned around. The dollar is still stronger.
In multiple stories, and I'm sorry, Lisa, the story in Washington, is chaos too strong a word?
Well, yeah, if you look at markets, because they don't care. I mean, if you see some T-bill action, perhaps there is that, but the dollar strength certainly doesn't go here with this. And there definitely isn't a fear of some sort of mass disruption from a default. That said, it does continue, and I think the bigger risk here, Tom, is what if we don't get the fiscal spending that people were pricing in? We still don't have an understanding of how people are balancing these sort of factors out in their equity calls.
John, get out the calendar. Tomorrow's the end of the quarter. I mean, that's all there is to it. As you mentioned, is it October 13 is when we actually find out, will corporations survive?
Margins. Lisa and I have been on and on about that, and you've talked about growth. Will the growth story, Tom, outweigh the story that may happen, may develop with margins? How many Nikes will we see as well? I keep asking that question. Supply is the issue, right? And we've been dealing with that somewhat. They've been minting money, these corporations, through the year. But as supply starts to weigh on demand, on output, on consumption, it's going to be a story for Q4.
Data quickly here. Oil off the $80 Brent crude, 78.54. Helima Croft says supply will come on. John, what do you see?
I see commodities coming back a bit, Tom. Crude back down below 75 at 74.78, down 0.7%. I see yields come in after yields exploded higher over the last week. We're down 3 basis points to 150.28. Crisis over, Tom. I don't know what the crisis was. I still got to get my head around that bond market move of the last week that still people are trying to explain. That move is so many things to so many people that we don't have this clean story going into Q4 yet for that bond market, Tom.
You know, let's do this. There's such interest here, the bull versus bear case, and I guess we know Doug Cass, the trader, going along today off of a really committed short of the last number of weeks. With a longer view and an intelligent view is Jay Pulaski. He's with TPW Advisory and far more with decades of experience. Jay, I want you to get us out 9% on the Dow Jones Industrial Average. We talked to Laidler, the bull, earlier, Ben Laidler, ex-HSBC. We talked to Pulaski today, the bull, and somehow we're magically going to get out to Dow 38,000. How do we do it?
Wow. Okay, Tom, thanks for that lead-in. I'm not sure about Dow 38,000. I'm not really super bullish on the U.S. equity market. We're actually underweight the U.S. relative to the rest of the world. But I do think, look, it's been a very challenging environment, very choppy. You know, pick your reason to be bearish. Hard to be bullish when there's so many kind of missiles coming out of nowhere, power shortages, Evergrande, et cetera, edicts out of China, you name it, U.S. political uncertainty. But I think the key point is in the environment to keep your eye on the big picture. And the big picture for me is really one of several components. One, most importantly, Delta is fading as a key issue for financial markets. Two, Asia is reopening. Japan just announced they're going to end their lockdown. So Asia reopening is a real critical issue here. And three, growth is bottoming. Just as everyone's talking about all these issues, supply chain, all these worries, the Citi Economic Surprise Index across the globe, in the U.S., in Asia, and in Europe, all three of them are bottoming and turning up. So to me, I think we're going to exit this year and go into 2022 with a synchronized global expansion.
Interesting.
That's the first time we've had that since COVID began, and that's going to cure a lot of these ills, and we will have had plenty of opportunities to sell, and therefore the market will move higher because they're going to be, in a very simple explanation, more buyers and sellers as we look into that much more favorable 2022.
Thanks for the last bit, Jay. As always.
There you go.
Thank you, sir.
That's easy.
I know. The synchronized global growth
still early in the morning.
that we didn't get this year. Jay, you think we get it next year? I just wonder how the dollar fits into that, because right now on the screens, dollar stronger.
Yeah, no, I think that's right, John. And look, Delta was provided a lull that I at least wasn't expecting for it to be as significant. So what that did, this Q2, Q3 lull, which is now over, even though everyone's still focused on it, markets focus forward, that lull pushes inventory restocking, et cetera, into 2022 and reaffirms the growth profile. The dollar, look, that's tricky. One could argue that it's broken out. My view is that right now the rest of the world still hasn't confirmed that synchronized expansion. Once that expansion is confirmed, then I think dollar weakness follows. The dollar has had multiple opportunities to break higher. Now it looks like it is technically breaking out. Does it sustain that breakout? I tend to doubt it. That's not the position that I have at the moment.
Jay, it does underscore that there is a different nature to this reflation trade. And I know that you're leaning into cyclicals, but the nature of which cyclicals will outperform at a time of higher oil prices and supply chain disruptions that keep crimping some of those margins in specific sectors. I'm thinking industrials and materials in particular. How much is that changing what you want to own?
Yeah, no, I think that's, again, a right on the point question, because we are bullish, especially in the U.S., cyclicals and value and small cap. That's our positioning in the U.S. We're in the early phases of a transition, multiple transitions as I see it, all very important. The first is from a liquidity-driven market to an earnings-driven market. The second is from a growth-driven market to a value-driven market. And the third, which ties together with this, is the fact that we're ending a 40-year bull market in bonds as we break higher in interest rates, which I think we'll do over the next 6 to 12 months. We get to above 2% on the 10-year. That's going to break a 40-year trend line. So I think what we've seen this week with the things that we're talking about in terms of bond action, to me, that's just a precursor of what's going to come. And so it does come into your cyclical to get to your answer your question, Lisa. Sorry for the roundabout way. But we're focused on financials because of that rate outlook that I just expressed. We're focused on energy. I think we're going to be able to make energy something I've been on for over a year. Energy, make money as both investing in fossil fuel, as we've seen with oil, and in clean energy, as we've seen with carbon. That's one of the pair trades that we have. Right. We have big positions in both XLE. As you know, I focus mainly on ETFs. Big positions in XLE, big positions in KRBN. Both of them are working, and they can work together. So there are really significant opportunities because in the midst of all this, we're having to deal with climate change and climate mitigation. Right. And that, to me, is the single biggest global macro trend theme of the decade.
And, John, what's so important in this narrative, and frankly, what we heard from Ben Laidler, David Kostin, or John Golub, is the response of corporate leadership to the cards they've been dealt.
And that's going to be the difficult thing for the quarters ahead, Jay. The cards they've been dealt with so far are higher costs, a struggle to access the goods they need to sell. We're going to see a lot of that through Q4, through Q3 earnings season. Jay, what's the playbook for you? And I know that's a shorter time horizon. I just wonder how you look to approach it.
Yeah, we're going to look through it, John, because I think, again, markets focus forward. And if anything, if we've learned anything over the last year, that speed is picking up. I called it COVID speed a year ago. I introduced the concept of climate speed a month ago. Speed is really the thing to focus on. So you have to look forward. I think the markets are going to pay much less attention, investors much less attention to Q3 results, much more attention to Q4 in 2022 outlook. And yes, supply chain issues are a concern, but they are going to fade. Asia is reopening. The port backlogs are going to ease. All that stuff is temporary. It's not permanent. And so as it fades, that just provides a tailwind to the upside. Profit margins are at all-time highs. I'm a believer that we have a chance to move into a higher than above trend growth outlook, which is fueled by a CapEx boom, which I've written about, just about perfect conditions for a CapEx boom, which can provide a productivity surge, which offsets the increase in wage costs. And we have an environment like the second half of the 90s, from 95 to 99, when you had productivity gains offset wage gains. So you had a high growth, low inflation environment, and stocks did extremely well. I think that's what we're setting up for in the developed economies around the world in the next couple of years.
Just to confirm for our audience worldwide, it is September 29th, 2021, not 2020, although this sounds like an interview we might have done 12 months ago. Jay Pawlowski, thank you, sir, from TPW Advisory, founder and principal. And Tom, that really is the call that people were looking for through 21 that has not developed. Jay is ultimately making that call now for 22. The synchronized global growth is going to be the story of next year. It did not develop this year.
And what I would emphasize, John, to our viewers and listeners, it's not a bullish call. It's the nuances of the people making a bull call, given the stresses that are out there right now.
Here's one stress, Tom. The U.S. default is not an option, from the White House advisor Jared Bernstein and on CNN. And most people agree.
There's going to be some of those discussions on Capitol Hill today, says Anne-Marie Horton.
26 points higher on the S&P. It's a turnaround from New York City this morning. Good morning. Up 0.6 of 1%. Tom Keene, Lisa Bravitz, Jonathan Ferro.
Synchronized global gloom is what
this is Bloomberg.
Synchronized gloom.
With the First Word News, I'm Ritika Gupta. On Capitol Hill, Democrats have hit a wall in their attempt to avert a government shutdown, avoid a debt default, and advance President Biden's $4 trillion economic agenda. Democratic factions remain at odds over the giant tax and spending package. Meanwhile, time is running out for funding the government and raising the debt ceiling.